Next up, from the future of work to the future of Fintech. And who better to talk about it than Janet Ong, the finance editor of Yahoo News Singapore. Please step up to the stage, Janet, and your panel. Thank you very much.
Yeah.
I think I'm on the end.
Can I speak now? Thank you, everyone, for coming. And without further ado, let me introduce our panelists here. On my right is Sreeram Iyer from ANZ. And then we have Dennis, Jennifer, and Dawn. Would you like to tell us a bit, give a couple of a brief introduction about yourself?
Sure, I can. Thank you very much for listening to us. My name is Sreeram Iyer. I am the Chief Operating Officer for the Corporate and Institutional Business in ANZ Bank. This is a global role. I'm based out of Singapore. And my job has got a lot to do with automation and with fintech and with digital transformation.
Good afternoon. I'm Dennis, and I run the Tomorrow Digital Bank for UOB. We've launched in Thailand, and we're working on the next country right now.
Hi, I'm Jennifer Doherty. So I head innovation for HSBC's liquidity and cash management group for Asia, responsible for matching the upcoming technologies with our customers' problems and bringing those to life.
Hi, my name is Doan, and I head innovation and digital for BNP Paribas in Asia Pacific, covering wholesale, so mainly global markets, corporate banking, custody services, and wealth management.
Right. Thank you. And just a little bit about, we all know what fintech is and how that has changed the way traditional banking is done. And the recent fintech adoption index just mentioned that Singapore is leading in terms of fintech adoption. And consumers are also the consumer adoption rate has also risen. So, Sreeram, would you want to share with us how corporate banking, how the fintech has disrupted corporate banking?
Right. So I'm pleased you asked about corporate banking because the general popular public discourse on this topic is on retail banking, and
yes,
it is on credit cards and payments and all of that, which is very powerful. But I do see of late there is growing maturity of fintechs and startups being able to support the corporate and institutional banking agenda. Mm-hmm. And that's because there is the combination of new capabilities that automation now gives us as an opportunity. And we tend to call it, or I tend to call it, the new ABCD, which is artificial intelligence, blockchain, cloud, and data, and many other things behind it. Right. And that combination is making the opportunity far more interesting than it ever was in the prior period.
Right. And in terms of payments and cross-border payments, has that also revolutionized that for you?
You know, if you reflect on this point, that there are some 25,000 banks in the world. Mm. Every 12 months, this industry invests $600 billion in technology. Right. So there is extraordinary experience on the table, and one of them is about settlements and payments, which is now, manifold times far more efficient than it ever was in a corporate and institutional sense. So what are called straight-through processing rates, meaning there is no block, is now upwards of 99.9% around the world. So it's a big piece of work, a big opportunity.
Okay. And moving along from corporate banking to retail banking, Dennis, would you want to share with us how that is changing the way your bank is operated? I think earlier this year, UOB had launched its digital bank in Thailand. Would you want to share a bit about that with us?
Well, I think the big decision for most banks today is what you should build internally and what you should partner with the fintechs. So our journey has been, we are leveraging most of our product platforms internally, what we've already built, and the unique thing about UOB is our footprint in the region. We have full subsidiaries in most of ASEAN, plus we have spent many years consolidating the platforms and standardizing the product and back-end platforms across the region. So having done that, then our strategy for the digital engagement solutions and the customer engagement solutions is really to partner with the fintechs of the world. So there are 5,000 fintechs globally. A handful of them are focused on the area that we are most interested in, which is software that allows banks to be able to engage customers in a more superior way. And we actively monitor these companies, and basically, if we see something that we're interested in, then we do a POC with them and incorporate them in our current stack to support the fintech. So right now, we have implemented for Maniga, which is an Icelandic company that focuses on categorizing data, enriching data, and Personetics is an Israeli company that is looking at, from data, how do you produce insights. So we have put the two fintechs together, so our data is being fed to Maniga. Maniga is helping us clean the data, enrich it, categorize it, and then that's fed to Personetics, which is generating insights from the data. So it is basically, to put it in a very simple way, a giant pattern recognizing algorithm. So it recognizes that you've made payments every month and this month you haven't, or someone's paid you every month and this month the person hasn't paid you, and things like that. So our strategy is basically to build in the traditional product categories where we are basically standardized, and in the Tomorrow Digital Bank is really a regionalized footprint, and then the engagement software is basically coming from fintechs around the world. So we can innovate and we can also customize it very quickly.
Right. It's interesting you mentioned working with fintechs. Is there any issue of interoperability, like with the issue of being able to merge with some of the processes that the banks that still uses?
Well, in the way we have architected it, you need to, of course, and every bank is in the process or has already completed basically adding the microservices layer to your entire backend so that you can basically make standardized calls to all the backend functions. So that's a given. Over and above that, then your data infrastructure, your data governance, and the security around that, and how do you feed that data? Because most of the fintechs that we're dealing with in the customer engagement space, they'll be looking for data that you can feed to them. So you need to build the entire infrastructure to be able to do that very easily. And then once you set it up, every subsequent fintech is basically how do you, integrate them into your data stack and pass the data to them, and then they will process it. I mean, currently we are not, we are doing all this in-prem. Currently we are not, as of now, although we are evaluating the possibility of using public cloud, but so far everything is run on the private cloud.
Okay, thank you, Dennis. Jennifer, would you like to talk a bit about how HSBC is using cloud technology in partnership with Google? How did you start this cloud journey, and how this has helped you to build new services and propositions?
Yeah, probably leads on quite nicely where you left off. So HSBC has adopted a cloud-first strategy going forward. So we spent probably the last couple of years at least looking around the market, analyzing who we felt had the strongest offering for the specific ask we had. So we've gone with 3 main cloud providers generally. We felt that each one of them had their strength in a certain area, so we will work with one, for example, for all things data and analytics, related. We'll work with another to host our applications and so on and so forth. So, I mean, the rationale behind going with 3 was because, you know, we're in 60 plus markets around the world. We have as many regulators as that. And we needed to ensure that we didn't have too much reliance on one single provider, which obviously from a contingency perspective probably wouldn't be acceptable risk to us and certainly wouldn't be an acceptable risk to the regulators. I think some of the benefits we're starting to see from that, and it's a phased approach, because I don't know if anybody else has tried to get permission from 60 plus regulators to move data to a public cloud. It's not easy. But we are at the minute working through the use cases for our customer base to see what, you know, extra capability we can bring with them. And once you have an easier access to the data, you can certainly work with that to bring additional propositions and insights to our customer base.
Okay, thank you. And as we all know, you know, virtual banking with fintech, a lot of non-traditional players are also coming into the field, and the Hong Kong Monetary Authority has recently granted as many as 8 virtual bank licenses. MAS, Singapore MAS, is saying that it's studying whether to allow this. How does this, the potential is great. There are about 1.7 billion people who are still unbanked. How do you see this? How do each of you see this? Is this an opportunity? Is this a threat? And how would you leverage on fintech going forward? Sreeram? Yeah.
Well, what I'm going to say is not really an articulation of ANZ Bank's strategy, but to lay out the fact that some of this is not entirely new. For example, in Singapore, since the year 2000, banks who are existing have had approval to want to launch a digital-only bank, which is somewhat independent of the core bank. So virtual banking in itself, in its different shades, has always existed. And I think the challenge which many regulators around the world are balancing is the use of technology from a customer point of view in the form of virtual banks, so customer experience, costs, charges, etc. But equally, if you're not parented by a traditional bank, there are other parts of a bank which are run in the sense of risk management and balance sheet, which equally come into play. So it's exciting. Technology allows you to do all this, but it is early days. Not everyone has jumped on. And the ultimate test is not about technology, but it is about business outcomes. So in an environment where banking returns are declining, how do you allocate very scarce capital which will give you returns of the magnitude based on the proportionate investment that you make? So we have to still watch and see what virtual banks pay off.
Right. Dawn, how do you see this in terms of regulatory and governance? Is that a concern for you?
It's true that banks are heavily regulated. So usually for fintech, not only providing a solution which is relevant is key, but also being able to have a solution which is adapted in terms of compliance, security, etc., to the constraints that banks have. And so today that's the challenge, and especially in Asia, we have quite a complex landscape in the region. If you look at all the regions, you have different landscape of regulation between the more developed countries, the developing countries, etc. So for banks which are present in the region, that they need to move at different pace and with different constraints depending on the regulator. And usually fintech being smaller, they don't necessarily have the resources legally, etc., compliance perspective to be able to address that with their solutions. So therefore, you need a certain level of maturity in order to do that, without also looking at the scalability level, which means that you need to have a solution you could deploy to potentially millions of customers.
So, Janet, I think I'll answer your question this way, right? First, the second part of your question was around millennials. And I think you mentioned a number, if I'm not mistaken, 1.6 billion, was it?
7.
I think Southeast Asia, where UOB's footprint is the third largest collection of millennials globally. There are 400 million millennials in Southeast Asia. So for us, this is a unique opportunity to reinvent banking. And within ASEAN, 1 out of every 2 working adults still doesn't have a bank. And today, with smartphones at $50 and the penetration of smartphones in ASEAN going up to 65% by 2020, you actually have everybody who's now carrying a bank branch in their pocket. And with the kind of telco plans ready available, they're all connected. So this is a big opportunity for a leading bank like UOB in Southeast Asia to really reinvent banking. Now, the first part of your question was more related to fintechs and banks.
Right.
So I think most people don't really understand the true essence of what makes a bank. So yes, banks have a lot of data. We generate data every time a transaction is made. But banks, beyond being data-driven, we are really risk managers. And we are risk managers because banking is a business of trust. Because the way banking works is that we take deposits from customers and then we lend it out. So it's a business of trust because if we do lend out some of the money you put there, then all the money is not available at the same time. And that requires a fair amount of trust, governance, strong regulations to be able to enforce, to make sure that the banking system is stable. And the banking system is very important because obviously if the banking system is unstable, then governments have problems. So from that context, I think a bank is very different from a fintech. A fintech doesn't manage that kind of risk, that kind of credit, doesn't have the liability to take deposits and ensure that it's well safeguarded, that you have prudent policies to lend, right? Because our inventory is actually our customers' money. And therefore, it's a very unique business. So I would say that fintechs are very far from being a bank. They might be very good at data, but then there's the data piece is the piece, kind of above the waterline for the iceberg. But below that, you've got all the things that make a bank what it should be in terms of being, a prudent player in the financial service industry.
Yeah, but for the maybe the millennials, the younger generation, the cost fintech will result in lower costs, is more convenience. There's nothing people hate more than going to the bank.
So I think that's a given. I think whether you're fintech or you're not fintech, those are table stakes already. But in research that we've done with millennials around the region, when we ask millennials who you would bank with, most of them are not banking the startups because you're placing your money there. So, even in the audience, right, how many of you would put money in a startup because they may not be very well regulated? Do you know what they're doing with your money? So it's still a business of trust. Around the world, less than 10% generally of customers would switch main bank. So I think there is obviously banks shouldn't be complacent. We need to continue to upgrade our customer experience, our engagement levels. But I'm just pointing out that big tech and fintechs probably don't want to be regulated. They probably don't want to be banks. They probably will play more around payments because that's where you can do so without the ability or need to really gather deposits.
I think just to...
Janice?
Sorry.
We're all fighting to say something.
I'm probably going to agree, but I think let's not come away from it like, yes, everybody talks about fintechs, and we've been talking about them for the last few years.
Yeah.
We went through the whole phase of, are they coming to eat our lunch, or are we going to partner? And I think a lot of that's stabilized now. But we shouldn't forget that banks have been actually working with fintechs for years. like literally years. We just called them vendors in the past, and now they're, you know, it's a cooler name and they're fintechs, right? So certainly at HSBC and you know, the banks I've worked at before, we partnered with, you know, people who had solutions in a very niche problem that we faced, and we integrated with our systems and we brought it to market. But at the time, customers didn't really care what was going on in the background. They just knew that their service has been delivered for them. It's kind of like the lid has been lifted and people can just see inside. And I don't really see it being too different. We've always worked with fintechs, so.
I think the
Oh, we have someone who
that must be
really
a banker.
agree with you there.
I think the reality also, though, is banks have been notoriously, generally speaking, slow to react and slow to change. And we often hear this phrase about legacy platforms. In fact, today's platform is tomorrow's legacy. And we must, I think, have the graciousness to acknowledge that many smart, young fintechs are very good at many things, such as scaling up or user experience, things like that. And banks are very good at many other things, which is why they've survived for 200 years or 180 years or thereabouts. So how do you get the best of both without, you know, being complacent about it is probably a good combination.
I think the really important thing is, let's not come away from what we're trying to do, keeping the customer challenge, problem, need at the center of whatever it is we're bringing to market. And whether that means as a bank you can build out yourself, or does that mean as a bank you partner with a fintech, as long as you're solving for the customer problem in a safe way, then I don't think the customer really minds, as long as you're giving them what they need.
Agree. And where do you see the collaboration between fintech and banking? What's next? What do you hope to see next? And maybe
Sorry, you might have to repeat.
Fintech and banking collaboration.
Uh-huh.
What do you hope to see or see?
No, I personally have been dealing with fintechs who have been offering services for corporate banking for a few years now. I've had difficulty finding the right profile for meeting the business needs that I have been interested in. And this is about AI or machine learning or blockchain and things like that. But I do see now in the last roughly 18 months or 15 months or so that the maturity has materially gone up. I also think that there is a better understanding of what will make this work. So we are a bank, you know, passing on a 100-page terms and conditions document to a young startup to say this is what the penalty will be if you don't get it right is not the way to go. So we have had to change the way we do business. So it's all heading the right way. And I think, and the previous panel spoke about this, eventually it is about people, not about technology. And prior to people, it is about strategy. So if you can bridge the gap amongst the staff that you have, and if there are several thousand in several countries, as many of us have, and bridge the gap between people who are aware to those who are interested to those who really want to adopt. You know, it is a maturity of your culture and the company. Then you call it fintech, call it whatever. I think it's all for the better. We should be optimistic, not get too bogged down with the many widely publicized statistics about job losses and things like that, which, by the way, may be partly true, but I do think that more jobs will be created than lost.
Right. Dennis, any thoughts?
First, I think there's a big difference between the B2B fintechs and the B2C fintechs. I agree fully that the future is probably very bright for B2B fintechs. The B2B fintechs have been around forever. Yeah. They just got a new name, and it's a bit more shiny. But I think the big development there is that in the area of customer engagement, analytics, I think there's a lot of stuff that in the future banks won't want to develop themselves and probably rely a lot more on the fintechs to do a lot of the innovation. And also because, frankly, I don't agree that banks are just technology companies with licenses or software company licenses. I really don't think that banks really are good at developing software products, because we often do projects, you know, and we don't have a life cycle to kind of be able to develop a piece of software, you know, through a life cycle, have a roadmap. And I think that the B2B companies definitely do this a lot better. And the big banks around the world, when I talk to the big banks, I think they have a bigger struggle within their technology entities, because their technology entities, given that they're so large, feel that they can build anything they want. Smaller banks like UOB, I think we know what we're good at, and we know what we're not good at. So areas that we're not good at, we definitely want to rely on more B2B fintechs to help us innovate there. I think in the B2C space, it's a lot more challenging. Banking is no longer about the place where you bank. It may not even be about the people that you bank with for the mass market anymore. It's definitely not about products. The products are commoditized. So it's all about experience. So if it's about experience, you want to control the interface, and therefore the B2C fintechs have a much harder time convincing banks that, you know, we should surrender some of the experience, because banks have to be obsessed about the experience and have to continuously upgrade and upkeep the experience. So B2C is much tougher, unless in some jurisdictions you have the separate licenses, for example, retail and wealth, and that gives you an opportunity to partner in a space that you cannot provide services. But in most of Southeast Asia today, the licenses are not segregated. Most retail banks do wealth, and so those are together. So I see there's less opportunity for the B2C versus the B2B fintechs.
And for HSBC, is that also similar?
Yeah, I mean, it's a bit of a catch-all answer. We have 39 million customers across the world, across 60 markets, so I can't answer for every single nuance. But I suppose I'd say, look, one, moving more and more digital engagements, which we have been doing over the past few years, but carrying on down that path. The second part being, yes, using more and more data, you know, supplemented with AI, etc. But I kind of feel that until you can build empathy into some of those things, the human connection doesn't really go away. So it'll be a real balancing act of the two. And then certainly for us, continuing to work with fintech through to the big tech companies, which again is what we're continuing to do, but always remembering that we are solving for a customer want, need, challenge, or problem. So however we do that, again, I go back to, I don't really think the customers mind too much as long as we do solve for the problem.
Okay, Dawn, any thoughts as well?
For us, what we're trying to do is work differently with the fintechs. You know, it's true that we're working with external partners for a long time, but now we're trying to bring more agility in the way we do it. We're trying to engage a customer at inception together with the fintech and our various internal departments in order to be able to have a shorter life cycle and deliver products at a quicker pace, or realizing when the product doesn't work, that we should switch to something else. Also, what we see is that the landscape is getting redistributed. If you look, for example, at the Singapore MS FinTech Festival for the last couple of years, initially there were a lot of booths of FinTech company, and recently now you see that predominantly it's a lot of big tech company and services company which are there. So the reality today is that the big tech companies are starting to bring offer in the fintech area. For example, recently Facebook has announced that they are launching their cryptocurrency. So to me, that kind of are reshuffling the cards in the sense that fintech today may not be able to face directly the competition of the big players, and they will have to reinvent and pivot themselves in order to offer a complementary services to the banks. If you take, for example, Digital Assets, an American company, recently they have decided to put their smart automation toolkit open source. And kind of, because up until now, they've been having their own proprietary blockchain technology, but now with all the big firms, it being Facebook, Google, Azure, coming up with their own technology, clearly they won't be able to face that kind of competition, and they need to pivot in order to be complementary to that. And so that's the way I see the ecosystem reshaping itself in the long term.
Thank you. And to wrap it up, just one sentence from each of you. Where do you see FinTech going in the next 5 years?
Where do I see FinTech going in the next 5 years? I don't know what will happen in the next 5 minutes, but I think it'll be a good outcome if we do not have the language of FinTech in our lingo as if it is a separate beast that is out there quite different from the businesses and the genuine business outcomes and the strategies that you're after. So you said one sentence, but I'll have one more, which is that I think it'll be out from our lingo in 5 years from now, perhaps sooner.
Dennis?
The future is definitely about data and how banks are going to use data to engage customers. So any B2B fintech in that space, I think the future is very bright. And Singapore should probably take a leaf from, I think Israelis do that very well. So how can we learn from them, and how can we nurture that business? Because I think there's a lot of potential for the B2B fintechs that are focused on data and how banks use data better.
Yeah, I'd probably echo that. I think they're going to be much more focused on data, but I'd also agree that I think the terminology isn't helpful because it seems to pit one against the other, when in fact I think they work very well together.
Right.
Yeah.
And the
I
last
see
word.
a digital ecosystem of financial services where banks will work together with FinTech and a big tech company in order to provide a sustainable environment.
Okay, and with this, we wrap up the session on FinTech Revolution. Thank you, ladies and gentlemen, for sharing your time with us, and have a good evening.
Thank you.
Thank you to our panelists.
Thank you.
Thank you.
Thank you very much to our FinTech heavy hitters there.